post-COVID. So this cycle is different than the last three. If you want to take a look at Chinese credit and US credit, which leads me to say there is no 4-year cycle, at least right now. And so we are in sort of a extended cycle. We're going to call it New World Order, change in, trade situation, whatever, right? And so I am of the opinion that this cycle ends when the Trump administration ends, because it'll be a reaction against Trump, whether you like it or not, doesn't really matter. And, that's a 2028, late 2027 story when the rhetoric of the opposing Team Blue Democrats starts to cause questions in investors' minds. Oh, what if they win? And therefore, what if things change? Therefore, I should take some chips off the table. So,
well, what do you guys think? Is the 4-year market cycle broken? I don't know. We're going to make a case for it, though. I think that's Arthur Hayes, of course. We have also Raoul Pal saying similar things. So we're going to talk about that today. We're also going to do a quick macro update. We're going to kind of run through the things we've been covering the last 2 weeks. I think upcoming catalysts, a list of them, as well as some of the threats, a couple of new threats that could be making their way into financial markets. But we're going to really focus on the 4-year market cycle, if that's broken, and then, of course, DePIN. We have a lot of projects to do some DePIN updates today. And we're going to talk about the helium news over the weekend and what that could mean for DePIN moving forward. Okay, because I think this could be a watershed moment for DePIN. Okay, we're going to have a space tomorrow on X to talk about just that and how I think the tides could be turning in the great decoupling. Okay, we've been waiting. We're like, hey, the fundamentals are here. DePIN's different than every other sector. Why aren't people seeing it? I think this moment, this announcement from Helium over the weekend can change all of that. So I'm gonna run through my thoughts on that as well. Let's get into some broader news though, real quick. Hopefully, guys, can you hear me okay? I'm not in my normal setup. I'm in St. Louis right now. My internet connection's a little bit spotty sometimes, so hopefully y'all can hear me okay. Also, hopefully everyone's having a fantastic Monday. It is October 20th. This is episode 84, I believe, 84. Big things happening. Of course, some big news of the day. AWS has had a major outage. Man, there's a lot of crypto projects getting exposed today that claim to be decentralized, not so decentralized. But check out the list of things that are affected. Adobe, you've got Apple Music, AT&T, Canva. I'll tell you that much. I had trouble with Canva today. ChatGPT, Coinbase. I mean, you go down the list. EA, goodness gracious. Amazon has a monopoly. It's kind of scary, actually, when you think about it. Obviously, some of the projects that we are working with in the DePIN space are trying to avoid these problems. Roblox is in there, Roku. Man, Square, Venmo's even in there, I know. Look at this list of companies that are impacted by this outage from AWS. Ouch is right. Man, we need to get away from AWS, I'll tell you. And there are some DePIN projects that allow you to do so. Not great news, but this is actually some welcoming news. You might get fewer Coinbase texts soon. I don't know about you guys, but I get still like daily. I haven't gotten one today, though, actually, now that I think about it. But it feels like daily, sometimes multiple times a day. I get these Coinbase texts that are saying, hey, you need to contact us and log into your account. Obviously, they had that hack. It's been a while now, but it's continued to happen. They busted this SIM farm, though, for hire that powered 49 million fake accounts used for global fraud. So that's obviously a huge deal. So big news over there, but not all is great news when it comes to fraud, or how about gem heists? I don't know if you guys saw this, but the Louvre was there's a crazy heist over the weekend. It says thieves carried out a brazen daytime heist on Sunday morning. They broke into the iconic landmark, the Louvre, using a crane-type lift to force an open window before smashing through display cases, making off with jewelry. Says that they couldn't even value it. According to France's interior minister and the museum, they escaped on motorcycles or scooters. It's like a freaking movie, guys. Actually wild. Says that it was done by robberies, and it was about a 4-minute heist. There are some pictures here. This is the lift they used. So they actually broke into a window at the Louvre. Here's some pictures of the gems they stole, guys. Like, this is freaking nuts. Apparently, they dropped one of the crowns on their way out. And here's another picture here. And here's actually a representation of what happened. So, they moved up into that window in the middle of the freaking day. I mean, there were like tourists and stuff in the museum. They just like sawed through this freaking exhibit, stole all the gems, came back out and escaped on motorcycles. Nuts. Absolutely nuts. They were talking about like, what's the market? Where can they even sell this stuff? They're speculating that they're going to melt it down, take the gems out and sell it on the market. I don't know, man. That's freaking crazy though, especially in the middle of the day. That's freaking pretty nuts. All right. Let's talk about the macro stuff. I want to cover through some catalysts here. This is stuff that we've been talking about over the course of the last couple of weeks. We'll dig into more of these, into the details more of these throughout the week and some updates, but I just want to run through some of the things we've been talking about because macro, guys, right now makes so much of a difference. It's been driving markets more than anything, frankly. And, TA is really important, but being able to tie TA to the macro stuff is just as important. And I'd argue that with right now with Trump and things going on, macro is probably more important than anything. With the China tensions potentially easing, there's been a lot of stuff over the weekend, back and forth here. They are meeting on October 31st. So in about a week and a half to talk about negotiations. And this feeds over to a lot of the other stuff on this list, actually. But we have to hope if they do come up with they have good negotiations, they have some good talks and discussions at that meeting, that could be really good for markets. Obviously, the opposite is true if things go the wrong direction. Spot ETF approvals, talked about that a lot. We have a bunch from Solana, and a lot of this is tied to the government shutdown. Once the government's back up and running, we expect that these will get passed. The government shutdown is on this list as well. Ukraine, Russia peace discussions over the next couple of weeks. A lot of talks happening there. JD Vance is going out there. So that is obviously huge as well. With oil prices down and with India and China, we're pushing on them basically to buy less oil from Russia. That could give negotiating power to the U.S. in those discussions in favor of Ukraine. We'll see what happens. Argentina election, that's coming up in about a week. So I think, we are now looking at, funding $40 billion. Some people are looking at a bailout. Others are saying it's more of a loan type deal. Either way, part of those discussions are obviously going to be around soybeans because they're undercutting our prices, selling to China. We need to put a stop to that. There's also some reports that Trump thinks that in those China negotiations, we'll be able to work out some of the soybean sales. So that would be good for our farmers. Other things in Argentina, negotiations or some of the things we're talking about. There's some reports that we might start buying meat from them. Our meat prices are ridiculously high right now. And I think they have a lot of oil reserves. So that could be part of the negotiations there. We have rate cuts coming up from the Fed in about a week. We also have one coming up in December. There's a rate cut expected in both of those sessions. One thing that's really interesting, some news that broke today, is that we're expecting CPI numbers to come out on Friday. That's unprecedented during a government shutdown, which would lead us to believe there's a reason for them to release those numbers. The CPI numbers have to be favorable, in my opinion. Why else would they choose to release those numbers unless they thought it could, push Jerome Powell and the Fed to make a decision? Obviously, they want them to cut more rates. So I would expect that we will see at least 1 quarter point cut on the 28th. Could the CPI numbers they're releasing on Friday push for a 50 basis point cut? We'll see. Solana breakpoint coming up on a 1210. That's always been a catalyst, particularly for projects in the Solana ecosystem. There's a lot of deep-in projects there. Notice that does coincide with that second rate cut. So that could be a really big week. The government shutdown ending. The betting markets, prediction markets are mixed on this, but there was a report that came out today that we could see the government shutdown in within a week. That would obviously, I think the markets would like that. And I think we'd see the spot ETFs get approved. So that would be a really big catalyst for crypto as well. That said, we would get some job numbers that we haven't had to worry about the job numbers so much since the government shutdown happened. What do those look like? Those could be ugly, and that could obviously impact markets. And then market structure bill, expected still to get passed this year. could get pushed into next year. I think the government shutdown and the government coming back up and running could help get that passed. So those are all some potential catalysts coming up. On the other end, guys, the risks, we've talked about some of this stuff. Regional banking crisis. Our regional banks are in trouble right now. They've got a lot of bad exposure to bad loans, to commercial real estate. They're holding treasuries that are underwater. That hit the news last week and pushed markets down. I don't think we're out of the woods there yet. Debt bubble bursting. These digital asset treasuries, many are trading at negative MNAVs. We had even Tom Lee come out saying that he thought the bubble may have burst. I don't know that it's going to create the big unwinding yet that people are talking about and crashing markets. I couldn't think we could see acquisitions of the underperforming DATs from some of the better performing DATs. Job market woes. Once the government's back up and running, guys, we're going to see what these job market numbers look like. It could be ugly. Okay. On one end, that could push the Fed to get more aggressive with rate cuts, but it could spook markets at the same time. Venezuela conflict. There's about a 44% chance that we end up having military intervention with Venezuela by the end of this year, according to betting markets. Trump tweets, this should probably be fucking number one. You never know what he's going to say. He can move markets $1 trillion in either direction in any given day with any tweet. So that's just something we're going to have to deal with the next 3.5 years. Japan reverse carry trade. There's a lot of stuff on this list. Again, we're just kind of going through the list. I didn't want to spend too much time in the macro today. We'll talk about more of this stuff in depth throughout the week. Of course, Japan has had very low rates. It's allowed people to take out loans, move that into currencies like the US dollar and invest in markets and real estate and in stocks. They've been losing control of their rates. They've continued to print money to keep rates down. How long can that last? It is worth noting, though, Japan, it was reported today that they are enabling their banks to buy and sell Bitcoin. So Japan's a big market. I think the 5th largest market in the world. That's big for crypto. But if this unwinds, this could be a problem. Real estate crash. Oh man, we have more sellers than buyers. The gap is widening, and I think we could see a reckoning. We've seen real estate appreciate a lot over the last couple of years, and I think we're seeing a case where sellers are holding on to values that existed a year or two ago, but the market does not show that appetite anymore. What happens? What happens when people that seemingly had all this extra value in their real estate, what if they don't anymore? Okay. I think we need to see the real estate market unlock. Trump's trying to do some things to get that to happen. We'll see what happens. Then, of course, number 8 here, Fed losing control of the bond market. What happens, guys, if we see what happened last year? Dropped rates 3 times, long-term duration yields increased. If we continue to see that, that's not a good sign, okay? So those are the main things I would say are threats and are opportunities or catalysts in the market through the rest of the year. There's a couple other things that have surfaced, though. Number one, this is Iran basically saying, the president says that they bombed and destroyed all of our nuclear industry. Well, in your dreams. So they're saying some things that could agitate Trump. We don't like that. Okay. That is certainly a threat. And this one is a big one that I haven't seen a lot of people posting about. Do you guys remember earlier in the year with DeepSeek, how that crashed markets when they basically said they were able to inference with way less compute? Well, Alibaba came out today and said they were able to slash NVIDIA GPU use by 82% with a new pooling system. So it says that they introduced this new computing pooling system. And it is decreasing the amount of computing power needed to serve their artificial or AI models. So this is obviously a big deal. So the background here, and we've covered this pretty extensively, but NVIDIA, the most valuable company in the world, had developed the H20 GPU for China specifically, right? Because there's Biden had era expert controls over the GPUs that NVIDIA is allowed to sell to China. Says the chip has come under investigation from Chinese regulators because there was some sentiment that we were putting some backdoor surveillance into the chips that we were selling them, and they have since tried to tell their companies not to buy the NVIDIA chips from the U.S. And it says at the same time, Chinese chip designers have stepped up their efforts in a self-reliant strategy. So they're trying to get away from NVIDIA. And it says earlier this month, CEO Jensen Huang also said that China is basically buying zero chips from them right now. So this breakthrough would be like a DeepSeek breakthrough that just earlier this year crashed markets. I don't think we've seen the markets react to this news quite yet. Of course, this is obviously a big deal because NVIDIA, again, is the most valuable company in the world. And you look at the rest of these companies, your Microsofts, your Googles, Amazon, Meta, you name it. Not only are they buying chips from NVIDIA, but they're investing hundreds of billions of dollars into data centers. And there's been this ongoing discussion about whether or not they're wasting capital. Is it really necessary for them to build out these data centers if we're seeing these breakthroughs like we're seeing with DeepSeek, with Alibaba now is saying they have? And if it's not necessary, that's obviously a huge deal because Harvard released this study earlier this year that data centers are basically leading to all the GDP growth that we're seeing this year. In the first half of this year, if you take out data centers, we only saw 0.1% GDP growth. Okay. So if all these build-outs are actually unnecessary, then what does that mean about the U.S. economy? Is it all a facade? All the growth we're seeing right now, and that is obviously the concern there. Okay, let's move on. Let's talk about Arthur Hayes in this 4-year market cycle. So I want to play his full answer on whether the 4-year market cycle still exists. I'm going to also play what Raoul Pal had to say. And I think he has a really interesting take, both of them, on whether the 4-year market cycle revolves around Bitcoin halving, or has it just been global liquidity cycles that have actually driven the 4-year market cycle and just happened to coincide up to this point. Here is what Arthur Hayes had to say about this.
Arthur, on the weekly roll-up, the episode that we record, me and Ryan, every single Friday, we talk about the markets every single week. And overall, my vibe, my state of the market, my play, is that we got a good thing going right now. Bitcoin has been up just incrementally for 3 years in a row without attracting too much froth. There's no parabola on the Bitcoin chart. And, ETH got over all-time highs, but it's not there right now. And so there's seemingly just plenty of froth, just not in crypto. And if we were to play out the 4-year cycle, Tom, I don't know what you think about the 4-year cycle, but if we were to play out the 4-year cycle, we would be topping sometime in the next 1 to 3 months, like November, December, January. And that's 4 years later than 2021. And 4 years before that was 2017, the tops of the crypto market. And it just I remember both of those market cycles. It just does not seem that crazy. And so I don't know what your attitude is. If the 4-year cycle is dead, it's a prolonged cycle. Why are you even bringing up the cycle word to begin with? I just want to get your read on the whole cycle nature of the crypto markets. I'll ask this question to both of you.
I'm writing an essay that'll be published. Yeah. So, I don't know if I get finished with it this week or early next week before I leave again. But basically, I did a market study. It's if there was a most popular question or that I got asked, I don't know, 30 fucking speeches during Token 2049. Yeah.
What do you think of the cycle?
What's your view on the 4-year cycle? Are we topping? Is this it? Right? So it's okay. Let me go back. I intrinsically believe, just like what you said, I don't think we're in the 4-year cycle. I think we are in a cycle that lasts until it lasts. But okay, let's go back to think about, there's been 3 4-year cycles, right? 2009 to 2013, 2013 to 2017, 2017 to 2021, right? And if we take a look at I try to make it as simple as possible and use the same chart in each 3 periods. And so I took a look at Fed funds rate, effective Fed funds rate. I created a US dollar credit index, a proxy, which is basically just other deposits and liabilities from the banking system in the United States and reserves at the Fed. So that'll capture quantitative easing or quantitative tightening, and it'll capture bank credit growth up or down. And then as a kicker, I said, well, you can't talk about the United States without China because they're kind of interlocked and they either complement each other or go in opposite directions. And so, I just pulled a Bloomberg credit 12 months change credit impulse index. And so if we take a look at the first cycle, we have essentially the genesis of Bitcoin, which is, I believe, a reaction to the response of the United States to the global financial crisis. It's I don't believe it's a coincidence that it was published on, the 3rd of January, 2009, right after Ben Bernanke announced quantitative easing, Infinity or One, TARP, all that kind of stuff, right? At the same time, China did its part, and they went on the largest expansion of infrastructure credit fuel growth in its history, and you'll see the chart. And so basically, you have yuan and dollar credit being issued ad infinitum in 2009. That sort of catches up with the Bitcoin price by late 2013, and we get that $1,000 or $1,400, whatever you want to call it, peak right before MTGOX imploded. You'll see in 2013 that credit growth rolls over a bit. You have the taper tantrum in the United States in mid 2013, which finally catches up with credit growth. In China, they were not growing credit as fast as they were. So the rate of it, it decelerated, even though it was still growing. The second derivative was deceleration. And so that popped the first crypto bubble. Then we moved to 2017 bubble, the ICO bubble. And in that instance, you had China leading the way, where they went on a massive credit expansion in 2015, which caused a high in the Shanghai stock market, a massive devaluation of yuan in August of 2015. And this sort of brought Bitcoin out of its doldrums. And that started the 2017 ICO rally. But the United States is going in the opposite direction. Fed funds was actually increasing once we get into 2017, and credit growth was falling. And so finally that caught up with Bitcoin, because you can't really escape the time value of money. No, nobody can. And the bubble pops in 2017 by the end of 2017. Then we get the third bubble, or whatever you're going to call it, the COVID response. Obviously, we know what that story was all about. That was stimulus checks in the United States. China was very circumspect in the amount of money it issued, but again, its credit growth increased. And by late 2021, we had the Fed talking about how it was going to restrain its balance sheet, increase interest rates due to inflation, and pretty predictably, Bitcoin peaked in November, right around the time when everyone expected the Fed to start on a tightening cycle. And now we're in the current cycle. And basically this cycle has been about the reverse repo program, which was the $2.5 trillion that bad girl Yellen injected into the markets starting in 2022. And that has basically run out until now. And so if you're a proponent of this theory of, okay, for your cycle, you would say, oh, well, take a look, reverse repo at zero, there's no more liquidity. But the Fed has started cutting rates. You have Trump and Bessent talking about how they want to run the economy hot, which basically means either the Fed prints money or the big system prints money. I don't care which one. You can listen to speeches. They'll talk about either one interchangeably. They want to juice the housing market. I don't have the chart in front of me, but it's something like trillions of dollars of home equity that is basically sitting dormant on the balance sheet of the American public and their housing market. And Trump is going to lower mortgage rates. However he does it, there's various ways to do it, to unlock that money to then go into financial markets or buy a house, buy a car, but whatever. Trump is talking about stimulus checks. China, which has been in essentially on and off deflation in terms of credit growth over the last few years, is making noise that they want to revitalize the housing market. Will it be as crazy as 2015? No, but it won't be as bad as it's been post-COVID. So this cycle is different than the last three. If you want to take a look at Chinese credit and US credit, which leads me to say there is no 4-year cycle, at least right now. And so we are in sort of a extended cycle. We're going to call it New World Order, change in, trade situation, whatever, right? And so I am of the opinion that this cycle ends when the Trump administration ends, because it'll be a reaction against Trump, whether you like it or not, doesn't really matter. And, that's a 2028, late 2027 story when the rhetoric of the opposing Team Blue Democrats starts to cause questions in investors' minds. Oh, what if they win? And therefore, what if things change? Therefore, I should take some chips off the table.
Very interesting stuff. And, going through the history of the credit cycles, the liquidity from a global perspective. And of course, the thing he was talking about with the reverse repo markets is, while, yes, they said we had quantitative tightening going on over the course of the last few years, we had this stealth QE, if you will, where they pushed about $2.5 trillion into the markets through the reverse repo markets. This is now gone. Okay. And this, of course, is why Jerome Powell came out about a week ago saying, yeah, it might be time to stop QT and move into QE. Well, of course, because you don't have this lever to pull anymore to push liquidity into markets. And that's the only thing that's going to keep this thing going, right? You also have rate cuts coming. So I think there's something to be said about, this theory that we are in an extended cycle. And I think there's a lot of people that are saying that we are in the bear market, the 4-year cycle is over, etc. But I think it's worth thinking about this. What if it isn't just the 4-year cycle? Maybe that's just how the liquidity cycles have run, since Bitcoin's inception, and things have changed this time around. And actually, Raoul Pal has a slightly different take on this, but he also is under the sentiment that we are going to have an extended cycle. And here's what he had to say about it. This clip's not as long, just a little bit over 2 minutes, but I think it's worth playing both.
Why is Bitcoin sort of not wildly off to the races yet? And it's this chart. Bitcoin is basically, this is a detrended Bitcoin, and it's basically the ISM, which is the business cycle. Remember, we've always said it's the business cycle stupid. It is always the business cycle stupid. And all of these people who claim it's the 4-year cycle based around this and that, they don't understand the fundamental of what the business cycle is, why there's a 4-year cycle in everything. And we've explained it, and we'll go through it in great detail tomorrow in our Everything Code presentation. But basically, it's following the ISM. And rates have been following the same pattern. You see, rates should have come lower. They need to come lower because we need to roll the debt. We've talked about this. That's part of the Everything Code, fundamental part. And ISM, because rates are so high, has meant that Main Street has been screwed while Wall Street's made money from debasement. Earnings versus scarce assets. This is the issue that they need to solve, and they need to get rates lower. They get rates lower. Why? Why do we have an elongated business cycle that looks like virtually no other other time? It's because, and I only just found this out redoing the work on the Everything Code recently, is that in 2021-22, they actually extended the maturity of the debt from 4 years to 5 years. So that extension of the maturity of debt has pushed out the business cycle a year. The 4-year cycle this time around is a 5-year cycle. We don't know what the next one will be until we see where they all end up getting refinanced, whether it comes back to 4 because they managed to get some stuff at the long end, or whether they shorten it because everything's in the short end. We don't know yet, but this one is a 5-year cycle. And this is what it looks like. The 5.4-year sine curve, 5.4 years is the exact average weighted maturity of the debt. And it tells us the ISM should peak by 2026. We think liquidity probably peaks before that, as the rate of change of ISM changes and the rate of change of liquidity changes. Our best guess remains well into 2026, probably Q2.
Okay, so he is saying, again, that's the liquidity would peak in Q2 of 2026, but he's also a huge proponent of the 45 to 60 day offset of Bitcoin price to global liquidity. So in other words, he would be insinuating that we would be going into likely late Q2 into Q3 before we would see a peak in markets, and that again we would have an elongated market cycle this time around, not just tied to the halving of the Bitcoin, Bitcoin halving, but really the global liquidity in the business cycle. So a couple of really sharp people that are calling for this. They're not the only ones. Now, obviously, we see a lot of people that are saying, hey, the cycle's over. And I'm not saying that there is no, there's no impact from the Bitcoin halving. I think there is. I think it's a psychological thing. But I would imagine that the bigger driving force here does happen to coincide with global liquidity, which to this point has just been on a 4-year cycle. So that is obviously, that would be good news, right? For all the bears out there saying that things are over. And we're sitting here like, man, what the fuck are you talking about? Like, this has not felt like a major bull run. Now, I will say, you look at Bitcoin, guys, we got down to like near 17K, right? In the bear market. So it's run. You look at Solana, after FTX, we saw things get back down to like $10, I think $8 actually. Obviously, we've seen that run. A lot of other bags, though, have not. Okay. And they very much underperformed. And I still believe we have room to run. Okay. What does Kevin say here? Most of your others have been figuring it out these last couple months. Yeah. Okay. So Jesse Eckel has been talking about the end of the 4-year cycle. Yeah. So we're seeing a lot of people come together now and start piecing this together. Now, it doesn't mean they're right. And it doesn't mean that we're not going to see downside throughout this. I mean, we have, as I mentioned earlier in the stream, like there's a lot of threats still potentially, and Trump's the wild card. We don't know what he's going to tweet out at any freaking point in time to crash markets. Now, I think a lot of this will get sorted out in the next couple of weeks, as I put in the catalyst category there. I think a lot of the threats that I listed are not something that's an immediate threat. That's something that could come up over the course of the next year or years, plural. So I think that even though we may have some volatility ahead, I do believe that the market cycle is intact, and that we have brighter times ahead. And if you look at Bitcoin, I mean, as people thought that Bitcoin was dead, not just a couple of days ago, right? And it's kind of wild to see the sentiment change so quickly on crypto Twitter, where you have all-time highs a matter of a few weeks ago, and everyone's bullish, to all of a sudden, within the last 2.5 weeks, people going full bear and talking about Bitcoin dropping to 90,000 within the next week. Yeah, it's just, you have to almost unplug sometimes from CT to touch some grass and take a step back here, because it can be really easy to get caught up in the emotions of people posting. And you see a lot of these people that post and delete posts, and everyone's always right. So we're sitting at 111,000 right now. There could be further downside. If things escalate with China, for example, just as one example of things that could go wrong, we can see things drop out, right? If the digital asset treasuries all of a sudden start to unwind and start selling off assets, we can see things drop for sure. But there's also a lot of reasons to be optimistic about things moving up. And if you look at the prediction markets right now, they're pretty split. I mean, right now there's a 32% chance of us dropping below 90. But if you look at 130 or better new all-time highs by the end of the year, we're almost at a 50-50 chance according to the prediction market. So while it's split, there's still plenty of optimism out there. You wouldn't know it looking at the X timeline sometimes. But look at Kalshi, and I'm going to start pulling up Kalshi because this is another prediction market that I think does a pretty good job. But here we go. Let's see. So there is right now a 25. This is up a little bit today. 25% chance of us hitting 150K before January. So there's still a lot of optimism in the markets, and some other things for some hopium here. We're sitting in fear. We've been in extreme fear the last few days. One thing I was looking back at, when it comes to these extreme fear times, we don't stay there very long generally. I mean, the longest I think we were there was back right around, in this, this area right here, right around the FTX fallout. We saw it last for about 3 months. Okay. So generally speaking, throughout history, though, we spend very little time down in this extreme fear, and we do bounce back. So, it would be unprecedented for us to sit down where we're at in a long, elongated period. And that is why I do believe, we will bounce back. And it's just a matter of, what does that look like? Because we haven't seen alts perform, the way that we would like to this point. I'm going to make a point as to why I think DePIN is going to decouple later on in the stream here. And I think a lot of that has to do with what Helium announced over the weekend. But when you look at the potential upside for Bitcoin, I mean, guys, gold is sitting at over a $30 trillion market cap. It's added like 10 trillion this year alone. Silver has passed up Bitcoin. We're now sitting at 2.2 trillion for Bitcoin. And the one thing we have to keep in mind here, people are like, well, for it to match gold, if it happens in the next, 5 years, here's what the price of Bitcoin would be. These are denominated in US dollars. These are just going to go up over time. These are all, this is a hedge against inflation. This is investment in US dollars, right? The valuation of these companies. We're going to continue printing. And whether that's printing currency through the treasury or expanding credit through our banking system, it's going to devalue the currency. So gold at $30 trillion, shit, in 20 years, that could be 60 trillion or higher. It's just, we're going to expand the money system. So looking in the outlier years, we have to start thinking about this, right? Like these numbers are going to change drastically. You can't think about it in terms of the dollar supply today. So Bitcoin to me has phenomenal upside, guys. That said, I saw this report. I thought it was interesting. We're probably going to see some more about this in the coming days, but there's a couple of wallets that are betting that Satoshi's holdings could move. And this is obviously, I think, to me, this is one of the biggest threats for Bitcoin. And I don't think it's a long-term threat. I think that if it did happen at that point in time, it would cause a lot of panic selling, which I would intend to take advantage of. But there's a couple of wallets in particular that took out, two fresh wallets, not huge, but sizable positions that we would see some Bitcoin move out of what are classified as Satoshi wallets. And I think it's important to point that out. And you saw this jump up on Polymarket all of a sudden. And there's some speculation as to what that could mean. Now, there is a comment here, and I've seen a couple people say this. They said that Arkham possibly mislabeled some wallets as Satoshis, and that there's some people that maybe identified that and thought, well, hey, we might see some tokens move out of that wallet that is not actually Satoshi's wallet or holdings, and it's just mislabeled. So that's kind of the thought behind that. But we'll see how that plays out. To me, I don't think it's an immediate threat. I do believe, though, because the older wallets have different security, there are some concerns that Quantum could break through some of those old wallets, or they could be hacked in a certain way by forcing the encryption. So that is something we have to consider, in the longer term. And what do we do about that? That is definitely something we have to think about. Now, another potential catalyst here, though, is that the Fed, and this came up today, is expected to have a conference on crypto payments tomorrow. This was unexpected. Says that this announcement attracting a lot of interest from both TradFi and cryptocurrency sectors. And we don't know exactly what they're going to talk about, but it says here that they anticipate that the conversation will focus on stablecoin oversight and the integration of blockchain technology and payment systems and the changing regulatory environment, which continues to open up for crypto. So the expectation is that it's positive things that they'll be discussing. It does go on to say, though, that it is at a critical level with Bitcoin sitting at about 110,000, well, 111 now. As there's a lot of people saying that if it continues to get rejected at 111,500, a lot of people that do TA, if it continues getting rejected there, that's bad. If we reclaim the 117,000 level, that would push us back into a bullish trend. And actually, that's what Brandon, who he speaks in hyperbole. There's a lot of people that messaged me and they're like, "Hey, he's saying crypto's over, crypto's done forever." And anytime Brandon sees, let me pull up Brandon's profile real quick for you guys. But in the video, to pull up the video, which I do recommend watching, by the way. Whenever he says crypto's over and sell your bags is going to zero, again, he tends to exaggerate on these things. So this is Brandon here. This guy he's made, I think, 9 figures, over $100 million this year. He's been really, really accurate in spotting trend reversals. And that's the thing, though. He doesn't predict markets, right? He reads what the charts are telling us. He ties it to macro events at key levels. And right now, there's no doubt that we have been in a negative downtrend, when it comes to the crypto markets. Ever since really the China FUD hit, things have been turning in the wrong direction. But his whole thing is, look, if we reclaim 117,000 on Bitcoin, that does change the sentiment there. So for people that watch this video, just keep in mind, he does tend to exaggerate. It doesn't mean that it's over forever. It just means right now there's not any reason in the charts to be super optimistic. Looking at Solana, we're at 190. Solana's been holding on pretty well, man. It wasn't long ago. We were, earlier this year, I think we got down to like $120. Maybe it was 140, but it's been holding on at 190. And keep in mind, we have the spot ETFs that are going to get approved as soon as the government's back up and running. There's a lot of reasons to be optimistic. They also released this statement from their official account today that while AWS faces a widespread service outage, Solana continues to operate without issues. It says less than 10% of their stake resides in AWS. About a third of the Solana supply is staked, by the way, but it does have a breakdown here of the staking. And you can see Amazon is this little sliver here. So more than you would like, but the fact that it hasn't been impacted when things like Base has been down, the layer 2, they've had major problems with this AWS outage. So not a great thing for them. The other thing I'll say is this was teased for a while, and Solana came out today. They have a Gemini credit card launching, 4% back on all purchases with no annual fee. And it does say, I think they said there's staking in there as well. Yep, automatic staking for rewards. So that's pretty freaking cool, man. Gemini is making a splash for sure. And this is something that, I don't know, man. I might have to get this card. If there's no annual fee and you're getting 4% back in Sol, that's pretty freaking awesome. You're seeing a lot of these cards launch, but pretty cool stuff there. And it's a credit card. It's not, a lot of these are debit cards, but we're starting to see credit cards now. So that's pretty cool. You guys want to talk about DePIN? Let's talk about DePIN. Guys, I would say that over the weekend was the biggest, in my opinion, the announcement from Helium over the weekend was the biggest news of the year outside of the SEC classifying DePIN projects as a security, or not as a security. Sorry, they failed the Howey test and as a commodity and not a security, so it doesn't fall under the SEC. I think the news, though, this weekend from Helium, and we're going to go through this, is the biggest news, and I think it's a watershed moment for DePIN. And I know maybe some people don't feel that it's as big a news as I do, but I'm going to go through my thought process on that and why. He said that you believe in October. I believe in October too. We still got time left in the month, man. In the last 6 years, half the time, we saw the market down at this point in the month. All 6 times it ended up positive by the end of October. Okay. Not saying that's going to happen, but I do remain optimistic as well. Rocking the Helium news. Hell yeah. Okay. It's massive news. But let's take a look at the DePIN sector as a whole here. Let's see. This is on the hourly. So things are moving back in the right direction. Daily down, week, month, year, ugly. Obviously, we have not seen, and when I say the decoupling, I'm talking about DePIN moving away from the rest of the market. Okay. And we haven't seen that happen, right? We've seen alts when they dump, right? And DePIN has been no different. And we're like, well, the fundamentals are there. How come? We'll talk about that. Okay. And why I think we're going to see that change finally. But I do want to cover a couple of projects. We have GeoNet, this Mesma.btc. Put out some pretty cool alpha here, breaking down GeoNet service versus other service providers in RTK. And you'll see for the price, they have by far the best product out on the market today. And that's why they're getting so much traction. Look at the latency here. 1 second and 1 centimeter level accuracy, better than everyone else out there, and at a lower price than everyone else out there. That is the power of DePIN. And that is why GeoNet is doing so freaking well. There's also this guy, Crypto Insider, put out an interesting thread on how GeoNet Aoki network is tying into robotics. I put a post out earlier, and I've been very vocal about this, how I've rebalanced my portfolio over the last few months, especially in really heavy focus on robotics. Aoki, GeoNet, Rover are 3 that I'm really, really paying attention to, and I've been adding to my bags in because I believe robotics is the next big movement. Okay. We look at the GeoNet price though, man, it's pretty criminal. I mean, we're sitting at 12.77 cents, $40 million market cap. Give me a fucking break. Seriously. Like that's insane. I do believe that once the markets rebound and people realize what DeepIn is, we're going to look back at these times and be like, man, we had such a 2025. Well, 2024 was the year where like we saw the potential of DeepIn, everything pumped in the spring, and then we saw it drop out. To me, 2025 is like, it's been a year of building, headaches, I guess. I don't know. I disappointment to an extent. While fundamentals are getting stronger, the price action is low. But in other ways, I think it's been a gift. Okay, I don't think for some of these projects we're going to ever see these prices again, most likely. And some of these have dropped so much to bear market lows. You know, Aoki's another one that it's seen a good run. You know, this year, really since earlier this summer. So like, let's say back here in July, it really had a nice run from 9 cents. That's up a little bit over 100%. But yeah, GeoNet's hyper undervalued. Yeah, man, it's crazy to me. But I think we're finally going to get some attention into the sector. And again, we'll discuss that. I think a lot of that is around the helium news. But Aoki's another one, man, that like sitting at $67 million market cap. They're talking to the largest robotics companies in China. You know, they're talking about to Asian governments. They're talking to the largest airport in Singapore. They have 7-figure contracts coming in, like in robotics too. Give me a break, man. Like I think we're in the right place at the right time, guys. It's just we got to be a little bit patient here. Dava Network we haven't talked about much in a little bit, and I want to cover some major milestones they're hitting. But they put out this thread, you know, about the power of ICM and being able to raise funds, you know, through blockchain. And they're a great example of this in India, being able to crowdsource funding and participation from other parts of the world to build out infrastructure in this, you know, Adarsh Cable Networks, their newest LCO or local cable operator that they brought on, and they're bringing internet to communities that have never had internet before. You know, this would not be possible without DeepIn. It's freaking cool to see. But when you look at their metrics, and again, we haven't looked at this for a while, and I pulled this up today. I think the last time I covered this, we were at like 7,000 hotspots deployed. Look at the freaking growth. They've jumped up to 18,552 hotspots deployed. You know, they've sold 21,202, but they're adding these LCOs, and they are doing a hell of a job at getting these things installed. So, you know, they put this out over the weekend. They're expecting to have their token launch, it looks like, in December. So TGE is coming. The fundamentals are shining. This is one that I think people are sleeping on just because they haven't had a token yet. Just wait, though. You know, just wait. You also have 375 AI launching their token later this month. I think Deep Network is expecting to do a Q4 launch. I don't have that verified, but big news all around. Havelo with a big announcement today. They are adding Flux to their different compute projects. So Havelo, again, is you just go on, you get your computers signed up with their platform and deploy, and it automatically allows you to participate in different DeepIn projects with your compute power. So that's a big deal that they added Flux. That's freaking awesome, man. And their market cap is low. 337,000. Like what? Guys, like this is something that like wouldn't need to pump that hard. I mean, think about if we have once we have a DeepIn run. I'm not going to even say if at this point. I think it's just a matter of when. If this thing could pump to 10 million, that's not even like a big deal. Okay, if you look at the last market cycle, and I'm not saying the market cycle is going to be the same as last market cycle where everything just pumped to 50 million plus, but I think sector specific things will, and I think with DeepIn, with the upcoming decoupling that I expect, if this thing went to a $10 million market cap, that's a 30x, man. And that's not even that crazy, a $10 million market cap. So I'm thinking about just adding a bag just because, like, shit. I mean, it's where it's at right now. I just don't see that there's not financial advice. I just don't see that there's that much downside risk. I mean, famous last words, right? Other news, WeatherXM launched their weather assistant that works with Alexa. So that's pretty cool. You can get weather data or insights through your Alexa app. Not today because Alexa's down with with the AWS outage, but pretty cool stuff that they're building out some utility there. And I think there's some actual utility for WeatherXM in ways that we might not have thought before. By the way, if we look at their price, $3.89 million market cap, man, that is low. That is low. But there's some potential utility for these weather networks outside of what we've been thinking about to this point, because Nubula came out today. They secured an $8 million seed round to be an oracle for Polymarket and Kalshi for prediction markets. Okay, so the prediction markets are going to be massive. Obviously, I use them a lot throughout my live streams. They're going to be, well, Polymarket just got $2 billion funding on an $8 billion valuation. Prediction markets for weather are going to be huge, and they're really tapping into Nubula. I wouldn't be surprised if they tap into WeatherXM as well for that weather data, okay, for the prediction markets. And you see that's already happening with this network. So, man, that is a whole different revenue stream and use case outside of what I ever wrapped my head around for weather data for these DeepIn projects. So that's pretty big. And if you start thinking about that, could these be undervalued? Okay, if they start feeding into prediction markets, I think there's a case to be made that WeatherXM at the current valuation, what are we sitting at? 6.5 cents. If they announce that they start becoming an oracle for the likes of Polymarket for Kalshi as well, that would be big news, and I would expect us to see a nice surge there. So let's keep in mind this price. We'll take a look back here if any of those announcements do come to fruition. And that brings us to Helium, guys. Okay, the biggest news, in my opinion, of the year for any particular project. We've had a lot of big news this year. For one, they did win the best Wi-Fi innovation for the awards in Paris, but that's not the big news. That is big news, not the big news. We also had Grayscale put out a report on Solana. They highlighted Helium in their report. Also very big news, but not the biggest news. The biggest news, of course, is this post they put out over the weekend. Soon, they'll be buying for their out of the open market for their H&T burns. Okay, that is directly tying utility and the revenue to the token price, and that is what has been missing from DeepIn. Okay, and it says in addition to daily buybacks, they're also launching a digital asset treasury business. Okay, so I'm going to explain my thought process and why I believe this is really a watershed moment for DeepIn, and it's going to change the whole outlook for DeepIn. And you also notice one other thing before I get into my soapbox on this. Frank, Amir, they're posting a lot about H&T all of a sudden. This is not something you saw in the past. It's really been since, and Brian in our Telegram group brought this to my attention, and I talked to Tyler about this. It's really been since the SEC ruling that they've been really tweeting a lot about H&T. They also, remember, announced that they bought out. There's a big seller on Coinbase, one of their early investors. They bought all their tokens to get rid of that sell pressure, all leading up to this big announcement, again, about open market buys for burns in the digital asset treasury. And where are we sitting at with Helium? $1.89. It's like, we saw all this news. Granted, it was on a Saturday. Okay, a lot of people aren't on X. But we saw this news. It jumped up a little bit, and then here we are. Y'all, like, this is criminal, and I don't understand it. Okay, so here's my case. Let me pull this down here. Okay, so to this point, you think about crypto as a whole. There's been market cycles, okay? Everything's been hype driven. Everything has been based on degen investors coming in, whether it's a layer one, and you could argue, yeah, during bull runs, layer ones, their fees are higher, the revenue they're generating is higher, their TVL is higher. Yeah, it's because of usage on the network, okay? But when we go into a bear market, the usage on the network drops. The speculative buying drops. It turns into selling. There's never been any buying outside of speculative buying. You can even make the same argument about Bitcoin. Okay. And that's why these market cycles have completely dictated the projects and the success behind their price action. There's never been any real fundamental connection with the real world, in my opinion. You can argue that like the L1s are infrastructure being built out for the future, for our future financial rails, but you can't tell me that right now that their market cap is justifiable based on the fees they're generating or anything of that nature. There's no freaking way. Okay. So again, to this point, it's been all speculative buying. And we're sitting here looking at DePIN and we're like, well, the fundamentals are there. We're building projects with real revenue. We're differentiated from the rest. And I would say from that extent, yes, but not the token price, because if we're to this point, a lot of these projects, while they're generating revenue, they're only using a small percentage for burns, and most of them are doing it out of a treasury. Okay. So while that's decreasing the token supply, that's not giving any buy pressure to the market. Okay. So there's nothing to offset people selling the token. And the only buying pressure we've seen in DePIN to this point has been speculative buying. There's been a complete disconnect between the token price and the fundamentals of the project. Now you could argue that token burns are good for the price of the token, but show me where we've seen that come to fruition. I haven't seen it. Okay. I think this announcement over the weekend is a game changer, and here's why. Now all of a sudden, the buying pressure on the open market is from revenue, from utility in the project. It's not speculative buying. This is actually the fundamentals of the project bleeding through into the open market, into the token price. And we've not seen this in anything else in crypto. Okay, nowhere have we seen this in crypto. You add now the fact that they're going to have a digital asset treasury. This is, and we've seen this with some of the larger caps, sure, but this is now opening the door for institutional investors. So now you have traditional finance, TradFi investors that can get exposure to a project like Helium. And now they can see that, hey, this is the one project that has buying pressure from revenue. And I would actually make the argument that the decoupling moment's going to happen in the bear market. And I thought about this morning, and I would argue that altcoins are in a bear market right now. Okay, they've been all year. The rest of the large caps, no, but small caps have, in my opinion, been in a bear market. But when you're in a bull market, everything's going up, so it's hard to really decipher what's from speculative buying and what would be from fundamental buying, from token burns, open market buying, like what we just saw announced with Helium. Where we're going to see the disconnect, and we're going to see the great decoupling, okay, is what I want to call it, is going to be in a bear market when everything is just sell pressure, and there's no positivity in the market, and there's no one speculatively buying. That is where we're going to see the revenue buying shine through. And I think you're going to see some days where, the market's dumping, and we're going to see buy pressure from the fundamentals of Helium causing the token price to decouple from the rest of the market. I think we're going to see the same thing likely with, GeoNet. That's where we're going to see the decoupling, and we're going to see eyeballs on this sector. And it's also going to separate the real DePIN projects from the rest. The DePIN projects that are actually buying in the open market and have real revenue are going to decouple from the DePIN projects that aren't. And to me, that is going to be the big moment. When we start to see in a bear market them decouple from the rest as far as price action, and now you all of a sudden have these digital asset treasuries where TradFi is going to say, hey, look at this project. Why is it performing differently? Oh, okay, so they have a partnership with AT&T. Oh, they have revenue from Mexico. Oh, they're buying tokens in the open market because of their revenue. How do I get exposure to that? Oh, there's a digital asset treasury I can invest in. Holy shit. Okay, this is going to force the hands of other DePIN projects if this does work, and I don't see a world in which it can't or doesn't work. It's just a matter of how much positive price action do we see from it. other projects are going to have no choice but to follow suit. This is going to become the new standard, in my opinion, in DePIN. And if you're not doing this, I think that the community is going to let you know about it, and it's going to be a red flag. Now, that doesn't mean that you have to do fully open market buys in day one. Okay, I think that we will find AT&T and T-Mobile. That has to click for people soon. I think so, but Kevin, here's the thing that I think has been holding investors back. Savvy investors that are looking at this like, hey, AT&T and T-Mobile, that's great. They're driving revenue, they're customers. But it hasn't fucking mattered for the token price because they've been burning out of the treasury. So like as an investor, you're looking at this and you're like, the fundamentals are great, but like, why would I buy the token? What does that do for the token? You still, to me, it's no different than a meme coin. That's, and to the extent, it's no different from meme coin to the extent that meme coins are like, hey, we have a great community. We're going to burn 10% of the supply. It's a gimmick, frankly. But if there's a real fundamental use case behind it that will actually result in buying pressure and in the token appreciating, that changes the whole game. Like, that's how I look at it as an investor. That's why I've freaking added a bunch to my bag after this announcement happened. I'm like, okay, this changes things for me. All of a sudden, it's not just speculative buying. It's, hey, the fundamentals are going to cause buy pressure on the token. I guarantee you that TradFi investors are going to look at this the same way. Before they're like, great, I like the business concept. How do I invest in Helium? I don't want to hold the token that's disconnected from the revenue. Well, now this is different. It's changed. So I think in the early stages of a project, when you need to reinvest for growth, maybe you don't burn, or maybe you don't do open market buys right away. Okay. But I think that we need to see some sort of a hybrid approach where once certain milestones are met, and I think it should be on the revenue front. Once certain revenue milestones are hit, you have to start burning a higher and higher percentage of tokens using open market buys in the market. And that, I think, is a testament to the project succeeding and weaning off of, just reinvestment and giving token holders a reason to be token holders. And that might be different for every project. The big thing around there is going to have to be transparency around revenue, though, because you have to avoid project founders hiding revenue to avoid milestones, which I know sounds weird, but if all of a sudden that requires them to start doing open market buys as opposed to pocketing revenue, you could see them actually gamify that. So you have to make sure that you can hold them accountable on the revenue front. But I think that's the best way. I know some people were floating around ideas like, oh, well, once you get to certain market caps, but market caps can fluctuate based on market conditions. And let's be real, people can mess with, buying in the open market to push prices that, we see with Binance all the time. So there's ways to game that. And I don't think that that's necessarily always a true indicator of the value of a project. I mean, we see projects valued at over $1 billion right now that aren't worth shit. Let's be real. But I think if we have revenue milestones that projects can hit, and over time have to do more and more higher percentage open market buys of that revenue, I think that's going to be the route to go. But I think it's going to be a really cool discussion, and it's going to be really fun to watch what happens with Helium in the coming months and over the course of the next year and years, plural. But I do believe this is a defining moment for DePIN. And I think this statement that came out from Helium in this change over the weekend is an absolutely massive deal. And it makes me more bullish about DePIN than I have been in a long time. It's been great to see the building and the fundamentals, but to me, it's kind of been this question of, okay, when does that flow through to token holders? And we haven't seen it. And it's been really frustrating, man. But the decoupling I think is coming. We're going to talk about this tomorrow in the space. So the great decoupling, market buys and digital asset treasuries. It's a game-changing moment for DePIN, guys, and I think that we're going to be very happy. And actually, I have to say, like, it makes me less concerned about the bear market, actually, because right now, like, these prices are already suppressed to like bear market lows. And honestly, with the revenue now, if they are open market buys from revenue, I'm not so concerned about the sentiment of speculative buying. Like it matters, but you now have fundamentals offsetting the sell pressure. So the projects that are really bringing in revenue, it's not going to matter so much about bear markets. And actually, if you think about it, it's going to, I think, make the DePIN sector shine more versus other sectors. And then when we move into the next leg up, guys, it's going to be a complete game changer. You start adding in the speculative buying once people understand what DePIN is. Shit, like very exciting times, man. And I think we're seeing it. Nick posted this with Blockworks, but I mean, you add all the capital raises in DePIN, and this is when market sentiment's low. You have HiMapper at 32 million, Grass at 10 million, 375 AI. I don't even know InferenceNet. I need to check them out. 375 AI, they're public. Token sale, they raised $2 million. Daylight, 75 million. Now Nubula, this is the one I just talked about today, 8 million for the prediction markets. I think it's happening, y'all. And I think now with this change, we need to be less and less concerned about the bear market and more concerned about fundamentals. And that's exciting. That's exciting because that's something we can control. Market conditions you can't control. So let's see how it all plays out. That's what I got for y'all today. And the rest of the week, we will dig into some more details on some of the macro stuff happening. And of course, there's always new crypto news every day. Guys, appreciate you all. Make sure to reshare the space, or reshare the stream if you would. And if you can, join us tomorrow morning when we talk about the great decoupling and the helium announcement, man. I'm super, super excited. Go outside, touch some grass. Have a fantastic Monday. I'll see y'all tomorrow. Peace.